Are tax deductions and credits confusing? What's up, everybody? My name is Chris Hervochon, CPA, CVA. I run the accounting firm that goes by the same name. The website is betterwaycpa.com, and let's jump into it. So what is a tax deduction? Now, this is a super important concept for your tax return. And to know the difference between a tax deduction and a tax credit is also super important. So if you're confused about what the difference is between the two, stay tuned. I'm going to help you out. So what is a tax deduction? Well, it reduces taxable income. A good example is, let's just say you itemize your deductions. Let's say that you contribute $100 to charity. And you'll hear the common phraseology that says, oh, I got this tax deduction, it's a write-off. It's a $100 write-off. Well, what does that actually mean? How does that work? What does it equate to? So when I say it reduces your taxable income, what that means is if you have, let's just say $1,000 in taxable income, and you have this charitable contribution, which acts as a deduction for $100, now your taxable income is $900. Well, your tax rate then applies to that $900. So what is that $100 actually worth? Well, a really good high-level example is if your marginal tax rate, so that's the tax rate that you pay on your next dollar of income, is, let's just say 20%, then your benefit from doing the charitable contribution is actually $20. It's not $100. So that's a tax deduction. It basically just reduces your taxable income, and then the marginal tax rate, when you apply it to that deduction, that's the nominal benefit that you're going to get from it. So what is a tax credit? This is totally different, super important. Tax credits are much more valuable than tax deductions. And why is that? Well, tax credits are effectively payments. So if you have a $1,000 tax credit, or even a better example with the child care tax credit that came into being with the Tax Cuts and Jobs Act at the end of 2017, that's $2,000 per child, generally speaking. Well, that $2,000 tax credit is actually worth $2,000. So if you have $2,000 in income tax that you owe to the government, and then you get this $2,000 credit, it nets itself out, and you effectively owe no federal income tax. That's how that works. So credits are dollar for dollar payments toward taxes, essentially. It reduces the tax that you owe the government dollar for dollar. There's two types of tax credits. This is also super important. Non-refundable and refundable. Well, what's the difference? Non-refundable basically means that your tax liability, so in the previous example that I gave you, your tax liability can't go below zero. That's what non-refundable credits do. So if you actually owed $1,000 in tax and you had this child tax credit, theoretically speaking, and I'll get to that in a minute, it wouldn't reduce your tax liability to something negative. A non-refundable credit just reduces it to zero. It can't go below negative. Refundable, totally different. If you have a $1,000 tax liability and a $2,000 credit, then your tax liability is negative $1,000, and that basically means that the federal government is going to cut you a check just for doing the simple task of filing your tax return. So it gives you a negative income tax amount. So we just went through the non-refundable tax credits. You can only move your tax liability to zero. And we just went through non-refundable tax credits, and those can move your tax liability below zero. So what are some common tax credits? Non-refundable and refundable. So non-refundable, you've got the child tax credit, and if you notice, that's also in the refundable column. Now, why is that? And I just alluded to this a couple minutes ago, but that child tax credit is partially refundable and it's partially non-refundable. So $1,400 of that $2,000 is refundable. So that means that the child tax credit can actually move your tax liability below zero. I'm going to talk about that in a couple minutes as well. So the non-refundable credit, non-refundable credits, lifetime learning credit, foreign tax credit, the child independent care credit, so if you pay for daycare expenses or child care or what have you, and then the adoption credit. These are probably the 5 most common tax credits that I see among my clients on their tax returns. And then from the refundable side, same thing. These are the 4 most common that I see: the child tax credit, earned income tax credit, the American Opportunity Tax Credit, and the premium tax credit. And when I say premium, that means healthcare premiums. To go into all the detail of what these credits are and how you can qualify for them is beyond the scope of this video, but just know that these are the most common types of tax credits that I see with my clients. So that just about wraps it up. Here are some Jack Candy deep thoughts. Number 1, it's helpful to know the difference between a deduction and a credit. Remember, a deduction is just a reduction in your taxable income. The value of a deduction is determined by how much the deduction is multiplied by your marginal tax rate, assuming that you itemize. And again, we're seeing a lot less clients itemize now with the increased standard deduction. For married, filing jointly is $24,000. So you've got to clear a $24,000 hurdle just in deductions in order to be able to itemize. But for the most part, having that higher standard deduction is beneficial to taxpayers. So number 2, credits can either be refundable or non-refundable. So 2 different types of credits, generally speaking. Recently, a marketing agency client of mine, I filed her tax return and she had a negative federal income tax due. The reason for this, she's married, filing jointly, she's got 2 kids. She owns a marketing agency, and the amount of income that passed through to her, and then plus the QBI deduction, and I did another video for marketing agencies on the QBI deduction. I'm going to link to that here in the show notes, so go check that out. So her income from her business, minus the QBI deduction, minus the standard deduction, plus the 2 kids, the $4,000 credit. Eventually what we ended up with was a negative tax due, and she was totally surprised. And that was the genesis of this video, actually, is I explained to her the difference between refundable and non-refundable tax credits. And she said, you should really do this on your YouTube show. So here we are, talking about refundable and non-refundable tax credits. But it is possible, like I said, for that non-refundable or for that refundable tax credit to turn into a negative tax liability. And that was a perfect example that happened just the other day. Finally, number 3, researching tax credits is helpful. Certainly the list that I gave you is not an exhaustive list. That's only 9 different tax credits. There are many more. It's very valuable to you to research those, to know how you qualify for those, and to just do your homework. There's a lot of tax credits out there. They're not always that well known, but again, it's worth your time to research them and see if you qualify, or have your tax professional research those for you and see if they apply to your situation. Resources for today's video, the link to this is going to be here in the slides. The slides will be out on Google Slides and also on SlideShare. There's a link here to my website. Does your tax return stress you out? I can help you with that. This is the link to my tax return or my tax preparation page on my website. The YouTube video that I just referenced about the QBI deduction for marketing agencies, that is also linked here. And then there's a couple really good articles from Tax Policy Book, The Motley Fool, and Investopedia on the difference between refundable and non-refundable tax credits and the difference between deductions and credits. So good resources there. Do check those out. Let's connect. Chris@betterwaycpa.com. Phone number 843-608-0298. You can find me on Facebook, LinkedIn, Twitter, Quora, Pinterest, and Instagram. So you can find me pretty much everywhere. It's been super fun. Thank you for watching. If you like this video, please like it and share it. And also, please subscribe to my YouTube channel. It helps me get my content out to you. It also helps me to learn what type of content you like and what you find helpful. If you have any questions, please comment below, and I'll be happy to go back and answer those questions. So thanks for watching. I appreciate it, and I will see you next time.